Check, mic check. All right, there we go. Woo. So, bienvenidos desde San Francisco y Silicon Valley, and that's about the extent of my Spanish. I come to you today to talk about financial inclusion. I think sometimes we take having a bank account for granted. I want to start today by taking a journey with you. Just as I have come from San Francisco for the first time in Dominican Republic, I want you to take a journey with me and think about where you came from. Think about where in the world you were born, just for a second. Where you lived growing up, what your initial experiences were. Think about your siblings if you had them. Think about your parents. Think about your tíos and your tías, abuelas and your abuelos. Think about everybody in your family and what that experience was like. Did you move around? Did you stay in one place? Do you live like 5 minutes from right here? A lot of people, as they grow up, they don't think about maybe money in their lives. But what's most important is that we really think about those roots. So along with that, I want you to think about something else. So when you were growing up, kind of problems that you thought about as a kid, very, very different from probably someone from the other side of the world. But what kind of problems did you worry about? Maybe when you were a teenager and you were starting to get into your early adult years, what really, really freaked you out about the world? What did you want to change? It looks like the way that we are born, raised, and where we come from is a huge determinant about how we look at the world. How much we aspire, how much we think we can do. Everything stems from these experiences of our formative years. What are the possibilities in our lives? When I think about the roots that I have, coming from the United States, coming from Silicon Valley, born and raised in an area of fairly extreme wealth, and I think about the ways that my experience changed over time. My father grew up on a farm in the middle of the country. My mother was from the same town, which today has less than 450 people in it. And yet they moved to California and changed my life and my family's life as I was the first person to go to school. And a lot of people in this room may have that same experience. How we actually live our life, the opportunities that present themselves, have a lot to do with luck. They have a lot to do with not just where we come from, but our initial experiences. My father worked for the airlines, and I was very fortunate with my family to be able to travel around. As you travel and more, you get to see how other people's experience really changes the way you think. It affects your biases. It affects how you limit yourself or how you expand what you could possibly do. Good ambitions that you have. When you think about what's possible, go back to these roots. Go back to where you came from, where you've worked, and what your experiences have been. I've spent 25 years working within financial services, and I apologize for part of that, because what we're going to talk about is where technology is changing this business model, how it's becoming more inclusive. According to an ongoing global study by the World Economic Forum, these are the things that young people worry about today. So when you were thinking about what worried you as a child, were any of these on the list? Climate change, conflict and wars, income inequality, poverty, religious conflict, government corruption, where your next meal was coming from, whether you had clean, fresh water. If you didn't have the education needed to do well in your particular community, that impacts you. Whether you felt safe and secure as a child, even as an adult, that impacts how much you think you can achieve. Opportunity for employment and where you're going to go next in your life. These are all things that dramatically impact your life. A part of all of these things, there's money. When you think about even religious conflict, it comes down to power and money. You think about government corruption, it's power and money. But then you look at something that's extreme like poverty and income inequality, It directly is impacted by how much you have and how much you don't. The interesting thing about financial services is the way that the model has been built over the last several centuries is that it's geared toward the profitable people in the world. It's geared to those that have. Technology is changing that dramatically. If you look at the people that are living in extreme poverty today, that's 745 million people across the globe. This is 9% of our population. But look at where it came from. Look at 200 years ago and think about 94% of the world living on less than $2 a day. If I'm doing my math right, I think that's 10 pesos. Not a lot of money. I knew I was going to get that wrong. Now I understand how everything was more expensive than I thought. So think about how this changed, though. Dramatic drop in the last 200 years. Even 100 years ago, it's 77%. Extreme poverty. Where is your next meal going to come from? How can you afford to live? How can you raise your children? How can they be successful? How could you get them educated? How can you level up to the next iteration of your family? Where is this going to go? We've moved in society from a place of food, water, and shelter to a place where we have 7.5 billion people on this planet. And our needs have changed. Digital transformation of almost everything has changed opportunity. And as our tools have evolved, almost everything else in our lives have too. And if you guys have these scooters here in Santo Domingo, don't ever let them in. They're the scourge of the earth. Scooters are evil. So what are the building blocks of basic needs of what we really need to be providing to every single person on the planet? First of all, a bank account. In order to have sustainable employment, the ability to store, save, and move money, these are critical things to be able to grow as a society. And every single person needs to have access. Whether they are performed at a bank or not, we need to be able to provide access to bank-like services. Now here's the good news. In the last 6 years, 1.2 billion people have been given access to bank or bank-like services. Imagine that. But we still have a lot of room to go. We still have 1.7 billion people that are unbanked. 22% of our population has no access to a bank or any type of way to move and store money. Half of the people on that 1.7 billion are in these 7 countries: China, India, Pakistan, Indonesia, Nigeria, Mexico, Bangladesh. It's a global problem that can be solved through technology. Of the people that are unbanked, 62% have a primary education or less. Education and money are intrinsically intertwined. They're 2 times more likely to live in the poorest households of any community. A third of them, 3 in 10, are between the ages of 15 and 24. Nearly half are unemployed. And there's a gender gap here, as 56% of unbanked are women. The common reasons why people are unbanked, they say, 60% of them say, I don't have enough money. Why do I need a bank account? 37% say, I don't really need a bank account. I don't really get why I need one. 35% say, someone else in my family has a bank account. Why do I need one? But then 24% say, the bank is too far away. It makes no sense for me to have to travel to do something with my money. So maybe they stay in cash. 21% say they lack the proper credentials or identity in order to actually open an account. And 18% of them simply don't trust banks. But 2/3 of the unbanked have a mobile phone capable of storing and sending money. There's hope. If you think about the opportunity to bank the unbanked, the World Bank says that's a $380 billion opportunity that banks are now starting to look at. But if you think about taking not just the people that are unbanked, but the people that are underbanked, this is a multi-trillion-dollar opportunity, as every single level of society has a chance to be elevated. by meeting their basic needs and beyond. But it's not a level playing field. And I played football. I know I call it soccer. But I played football for about 12 years, and I couldn't imagine playing on a field like this. Who would win? You just have to kick the ball, and like half the time it's going to go in the goal. This is banking today still. But that's changing rather dramatically. There's 9 different ways that I want to quickly go through to talk about how the unbanked population is being addressed. First, in 2007, a couple dramatic things happened. We were talking about M-Pesa earlier. Well, in March of 2007, Safaricom, the telco in Kenya, saw that people were using credits as money. The mobile phone credits were being transferred between people as cash. So M-Pesa really legitimized that process and quickly grew to become the #1 transfer capability in Eastern Africa. Little other thing happened in June of 2007, and the iPhone was introduced. Smartphones have dramatically changed the relationship we have with our customers in financial services. It sets an expectation of personalization and has dramatically changed the way applications have impacted finances. In December 2007, of course, we had the beginning of the Great Recession, which in the way that I look at it was the beginning of the balloon bursting in the trust of the global financial system. And it ushered in the next 12 years of an incredibly low rate environment where startups and other companies focused in this area could really thrive. When we think about the emerging technology that we see today, artificial intelligence, robotics, all the things that we talked about today, distributed ledger, blockchain, technology is being applied to not just create efficiencies within financial services, but it's being applied to change the model across every single type of product or service you could imagine. And this genie will not be put back into the bottle. Technology is here to stay, and banks can't control it. FinTech investment. If you look at financial technology startups, over $55 billion were invested in financial technology startups last year alone, and over $150 billion across the last decade. If you would have said to bank executives 10 or 12 years ago that small startups were going to start to eat their market share and their profitability, you would have been laughed out of the room. But that's dramatically changing today. The other thing that's interesting is that being part of Santander as they created InnoVentures, which is their investment arm, you're now seeing about 1/3 of the deals in FinTech, including a corporate venture partner, like a bank, like a Santander. And so they see that need to invest. Other things that are going on, payment players are changing access. Again, I talked about M-Pesa, but in China, WeChat and Alipay are not banks, but they provide 98% of the country the ability to move money. Bcash in Indonesia, TransferWise on the remittance side, being able to move money at a lower price point is significantly important for people that are unbanked or underbanked. When we talk about big technology players, Line, Google, Apple, Facebook, WeChat, Baidu, whether you're a commerce player, whether you're a social network, you're starting to get more and more involved in financial services. And this is just going to continue. Neobanks across the world are starting to grow in significance and breadth of service, putting more pressure on banks to either provide additional customer value or continue to lose market share. This idea that banks can be unbundled is increasing. This is a Wells Fargo website with a line to every single startup which is disrupting every single part of their business. This is just continuing, and banks are nervous. Banks are still incredibly profitable, but this is changing the way that they do business. Mojaloop. The Bill and Melinda Gates Foundation is getting involved in addressing the needs of not just the unbanked, but really providing open source software to create payment platforms for any country, for any region. And we have to salute NGOs and other foundations for being able to provide services to enable the unbanked or underbanked to have more access into the system. Whoops. We also look at the Omidyar network. Pierre Omidyar was the founder of eBay. And I was part of a study that they did in order to provide FinTech startups different ways that they could look at doing well by doing good. Again, when you think about startups today, you have to worry about their business models. Are they in the right place? Are they doing good for society? And that's one of the things that this study provides, 9 different ways that you could be profitable and do well in financial services. We need more roadmaps like this. These are hundreds of startups that are improving the lives of not just the unbanked, but every single society in this world. This is only going to continue to get better and better, and it's a great story to tell. Financial inclusion is something that we need to continue to see grow and grow, because even the impact on the extremely poor has a ripple effect in the rest of society. What is the final chess move? What is the checkmate for financial services in the model? It's this ultimate Trojan horse of open banking. Open banking allows for the transfer of data between financial institutions in a secure way, between either a bank and a startup or a bank to bank, and also allows for payment transfer to occur between trusted parties. Open banking over the last 6 or 7 years globally has started to open up markets where we have trusted systems of data and payment information and movement of money, providing more ways for people to economically control their finances and their financial life. That banking has a social contract. Whether you're a bank, a FinTech startup, or someone who has the ability to make money move, we need to do what we can to provide low-cost solutions for society, and we need to do it with technology in mind so that it provides something that goes beyond Adam Smith's invisible hand, because technology is allowing for these things to be done in more economic ways. So what do we need to build an inclusive banking system? We need to provide identity to everyone, so that, in the example before, refugees have the opportunity to bring their assets with them when they are forced to move. We need to provide access to bank accounts. We need government and agricultural payments to be more digitized, and that will increase the ability for people to move money, accept money, and store money, and grow money. We need to increase the ability for person-to-person payments and person-to-business payments via QR code, via text, via any means possible in order to get more people into the system. Remittance, moving money across country lines, needs to be cheaper, faster, and easier. We need to improve savings and investment opportunities for every single person, regardless of your level in society. And we need to finally fix both spending understanding on your day-to-day finances, improve your daily life, give you access to credit when you need it. So how do we move from hearts and minds into action? That's things that we do at Unconventional Ventures every single day. We work with corporates and startups and foundations, and we work to let people know that things are moving and things are changing and things are improving, but it's not done yet. Global financial inclusion will be achieved within our lifetimes. Every single person on this planet will have access to a bank, will have access to the ability to move money, save money, and change by generation our standing together. Thank you.